Hi, everybody. How's everyone doing today? Paul Smith, Arena, good morning. Brock, let's take a look around. I know there's a few other good mornings. Kevin and Alexander. Okay. Everyone see the screen okay? Ride the Curve, Sinatra, Galaxy, how are you? Okay, so this was my call and trade of the week. No charts? You see them now?
Not yet, Coach. We can see you, but we can't see a chart. Good morning.
How are you, buddy? I guess I have to do a new share then. Okay. New share. How about now?
Nope.
Huh.
Still the image webinar starting shortly.
How's that? I'm going to turn off the video.
Still the same.
Now?
Yes, there you go.
Yes, now we can see you, Dale.
Okay. All right. I guess my face was jinxing my charts. Everyone, okay. No,
one shouldn't
I'm
affect the other,
kidding.
but okay.
All right, Dale, you may have snow on the roof, but that doesn't mean you don't have fire in the furnace. I like that. Okay, so this was really Monday when, again, I was, I'm very low tech. I'm low tech to the point that I'm no tech. And Monday I talked about the throw over, throw under, and then we were back inside to negate it, and how you trade it is to buy it next time in the formation, risking the lows of the throw under. And there were plenty of stop hunts above was another reason here. This is the next level of stops. You got to buy any pullback as far as I'm concerned. I think this could end up, if we start getting through 86.5, as a major bear market rally to retrace the break from 92 to 85 in big round numbers. And, you talk about 700 pips. So, let's talk about 62% back. It's going to be about 420. It's going to take you back to 89, or halfway back is going to take you back towards this major breakdown. Buy pullbacks. I see the glaring divergence on this, on the daily, glaring, okay, compared to these lows. And we're getting a weekly 2-week reversal. I know it's only hump day, but by Friday, I think it was 85.48. So, buy dips. I think there's more left in it. And what does that mean? If that's a correct forecast that we're heading up, that makes cable your preferred short, which is really what drove it, and euro your preferred long. So during days that you're bearish a dollar, you want to buy the euro, okay? And days that you're bullish a dollar, you want to short the pound. So I think the pound is done. I think yesterday, even though we held a level that Blake talked about, right around 780. I think that the pound has at least 135 in it. That was a pretty big level, 136, 135. And something else I want to point out, whether it breaks out or not today, is, and it looks like it's threatening, is Canada. Blake's been all over Canada. He's still holding it with great patience. But look at this candle that Canada has. So, I was talking to some of the people that I teach, and you look for market tells like this. Now, the dollar got killed yesterday, right? It was down 60 or so. This was the dollar yesterday, and this was Canada yesterday. So, in the environment of a weak dollar, Canada was up 40 or so. That's a pretty good market tell. So, we could break out. The other scenario is that the dollar's not done correcting, and we could have, some type of ABC. But Canada acting very good. Even with oil up, oil's trying to, okay, they had bottom in gold and silver. I think that there still could be one more break in gold. When I look at this, and I heard Blake say the same thing, we need closes back over 1760. All right. So, this still could be some type of, ABC and one more break. So, if we get up to 1750 or so, I still think there could be one more decline. That's just my view, Tom, and I'm wrong, as much as most people, but we get over 1760, I'll agree with you. I know some of the gold shares are looking okay. And silver, still a little weaker than gold. I was actually looking to sell silver if I'd gotten one more rally up towards 25.40. Maybe it still happens. Anyway, I remain. I still think there's a shot for maybe one more low in the silver down towards 23. We'll see. But I think the biggest story is the dollar. Okay. So once the dollar started to weaken, we got the blow-off wave accelerating in S&Ps. 92 was a big area in the dollar. You could see it here on the daily, see this 92 blue horizontal line. So I would say the dollar has to hold this 92 level. I know some people are looking for 91, but that would kind of negate this breakout. So I think we're getting close. And I think as well that once the dollar turns up, because I still think we're going to higher levels, the next time it turns up might be the tipping point in S&Ps. So we're starting to get some short-term divergences in S&Ps, but we still need some higher highs and some work to do with distribution. You could tell that here on the 2-hour, this high actually diverged. I'd like to see some divergences under 70 on both the 2 and the 4-hour. Okay, so right now it just looks sideways to me. Yeah, it could pull back, but I'm not ready yet to do it. I would keep a GDX. Okay, Sansi, I have it here. I know the shares actually are acting better than the gold, which is actually constructive to metals. So here's GDX, and then I'm going to hand it over to Blake. This was yesterday. Okay. So, this would have been gold, at that 1260 level, and we made a new a higher low instead of a double bottom like bullion had. Right, Sanse? Is that the reason you're constructive? But it could also be, ABC and roll over one more time and head towards 28. See this as pre-market? Should be, yeah. But it doesn't always, work out that way. I guarantee if gold fails and takes out the double bottom at 1680-ish, that will be under 30 in GDX. But you're right. There was a higher low in GDX compared to a double bottom in gold, right? So it is holding up better. I just think that we're going to flush it one more time. And part of that is because I think there's another dollar rally coming. Maybe they rally together.
Ooh, a dollar rally.
A dollar rally. And maybe Euro Euro's getting up towards some resistance levels. EG turned pretty good though, Blake.
It did. It actually turned really aggressively, more
Yeah.
aggressively than I thought it was going to. And we're actually at the 38% retracement or close to. Obviously you're finding sellers ahead of that. And I think a lot of the risk with the Euro right now would be that, I think it's being pulled a couple of different ways, Coach. It's got some of the crosses are really, really rallying back. I'll show you this because this is really what I'm focused on here. It's not so much here. Let me just pull this up really quick. You know, if you're looking at like some of these euro crosses, like the euro yen, for example, I mean, we're above this resistance here, or challenging this resistance, multi-year, decade. No, it's not decade. I think it's multi-year trend line. But look at the look at the euro Aussie. Look at the euro Aussie here. I mean, you know, we broke this triangle resistance. It's moving higher. You know, you got the euro. Oh, here's the euro sterling really quick. We broke out of a descending wedge. Where did I just flip?
It was above it. There it is. There.
Yeah. We just, you know, we came out of this descending wedge. That was a pretty massive move, right? Then you got, you know, you got the euro Aussie that I was just talking about. You got the euro New Zealand, which is, you know, had a nice lift the last couple of days. Then you got like the euro Mexican peso. This is a great, this is a great proxy for risk aversion. So if you see the euro dollar or the euro mex take off, then you know stocks are probably going to come under pressure. Speaking of which,
interesting, Blake, that with S&P's at new all-time highs, that euro mex, I never look at it, is putting in a higher low.
Good. Yeah, great observation here. I mean, we're not making lower lows with the S&P's at new high. This is, if you guys really want to know, like the ultimate risk on, risk off gauge in currencies, it is the euro mex for the most part. I mean, it's like one of the better ones out there. Like, I know a lot of people look at the Aussie dollar or, you know, the Kiwi, but
Aussie yen used to be the barometer.
Yeah,
now
Aussie
it's euro
yen.
mex.
Aussie yen I think is a great one too for a lot of people. But the euro mex, this is one of my favorites. And so if you see this euro mex start to break out, we start to take out like these levels, you know, 24.10 ish, you know, 24.12. You start to see us break through that, then you know that this market's really going to have some problems. And like I said, speaking of which, you know, the S&P is right at the 161% extension of this last, you know, the last stab lower. If you guys don't remember that from a couple weeks back when we tested this trend line, that was a really important day that we got that was a key reversal day. And since the key reversal day, I mean, you know, the S&P's moved from that low, you know, 6%.
The space needle.
Yeah, the space needle. Well, we'll see if it creates a needle. Maybe it's just
to pop the bubble.
Maybe it's the 30th story of the Empire State Building.
Yeah.
Right.
Yeah.
It could be.
It's a good probe up here. I mean, you know, even if it's not the top, I mean, tops take some violence. So, you know, to get a break and then another, you know, I saw your pattern in play.
Well,
I
think it's going to be important to see if we can. Well, I guess we should look at it like this, Dale. It's holding gains, right?
Yeah.
I mean, it's not like we've ripped up here and we're giving it back. We're up here and we've been up here for the last 2 days, really.
Yeah.
You know, so and we're not pulling back yet, but this is also the megaphone pattern resistance getting close to. We might make that move up to 4,100, which is the 161% extension of this this spring move lower, and that maybe that's it. You know, I mean, the market's not pulling back. It isn't. I mean, I wish it would, because I want just some two-way price action. I could care less. Honestly, Dale, this would be like my, you know, ultimate right now. I don't care if we just spend the next year doing this.
Ranging.
Yeah, if we could just spend the next year between 4,000 and 3,200, 3,400, we could just spend the next year in between here. You and I, as currency traders, we will have an absolute ball. But right now, when you're just stuck pegged at the highs, it's volatility is just kind of low. You know what I mean? And it just makes it's a little difficult down here, or a little difficult with currencies because they're just not going to move too aggressively when we're just, you know, bebopping around near the highs. But I do think that we're up against resistance, and I think this is going to be, you know, we might make one more stab higher. Like, I mean, like I said, we're not going down, so we might, you know, make another stab up there, that 4,100 before turning lower. It seems possible, but you know, I want to point out that the euro dollar, once again, we have just had a really nice recovery, and you know, we're here at the 38% retracement, and I have to point out that the Aussie dollar still looks like crap. If I think we talked about this yesterday. I can't remember. You know, when we do, and for those of you that don't know, we do the face webinar here, but then I spend another, you know, half an hour doing the morning edge for our ForexAnalytix clients. And then from there, we do the daily roundup, which is and you guys can see these on YouTube. They're just they're posted after the fact. They're live for the ForexAnalytix clients, and by the way, since I'm on this subject right now, this is our chat room from, you know, just this morning. You know, just us just chit-chatting away. Like, I'll show you. I got up. It's been a slow morning too. I got up right around here. Somewhere around here. So this is oh, good morning, everyone. This dollar Canadian looks like it wants to rip heads off some shorts. Oh, I did say that about an hour ago, and we're almost at the highs right now. So, but this is like our chat room where we chat every day, and this has been a very slow day. It's been kind of slow the last 2 days as everybody's come back from Easter. Anyway, so if you're a ForexAnalytix customer, you know, I'm not sure if I was telling you guys that during then or during the face webinar, but I want to say that the Aussie dollar is still creating its head and shoulder pattern. We're, you know, when you look at symmetry, Dale,
Yeah,
we're not.
we need higher.
Well, no, I don't agree with that. I actually think that
you're looking at symmetry in time.
in time,
Okay.
we're about
time left.
We're about there.
Yeah.
We're about there. I mean, if we broke down today, and by the way, the Aussie's literally on its lows as I'm saying this. If it breaks down today, that would, as far as I'm concerned, be a symmetrical head and shoulder pattern development. And I'm not a big head and shoulder pattern fan. And if you guys have, you know, heard my analysis the last couple of weeks, then you know that I am looking for the Aussie dollar to move lower, but I'm not looking for it to complete its head and shoulder pattern.
Would that be 69 if it did classically 71? Okay.
71, yeah. So if it completes, it'd be 71. I actually think it's going to stop at the 200-day moving average, or maybe the 618. Maybe we get down to the 78% retracement, because it all, you know, it depends what's happening at the time. It's hard to look out that far in advance. It is, you know, a lot of people, you know, make these predictions, like very bold predictions, like, oh, you know, I'm going to see the Aussie's going to drop to 70 cents, and then it's going to rally to 82 cents, and then from 82 cents it's going back down to 62 cents over the next 5.5 years. And it's like, well, okay, I'm trying to figure out what's going to happen 20 minutes from now. So, you know, good luck with that. And that's when I look at the Aussie dollar and taking into account where we're at in equities. Yeah, equities look like they're going to pull back here. You know, and remember, we're not too far off of a very strong seasonal, you know, sell in May, go away. And, you know, after this big of a run over the course of the last year, I think sell in May, go away, meaning the markets will pull back in the summertime, is a very real phenomenon this year because of the gains that we've seen. So just taking that into account, I think the Aussie has, you know, it's already been divergent. It already is at risk of pulling back because it's diverging away from risk appetite. So if the Aussie dollar breaks down towards, 74, 72 cents, it wouldn't surprise me. But I do think that we're going to find some support down here. And this is, as I've told you guys, this is ultimately where I want to be long, because, we are in a commodity super cycle. I do believe that. I right or wrong, it's what I believe. I think that there's a lot of demand and there's a lot of shortages of things. So I think you want to be long Aussie dollars.
Supply chain stuff. And you know what you're doing, Blake, and is that because you can see the whole market and how all the pieces of the jigsaw puzzle normally fit together, what you're doing is you're saying, well, Aussie, this should be a great environment for Aussie to be strong. And if it's not strong with a tailwind, how's it going to act when the tailwind becomes a headwind, which means risk off? So it's not acting good with risk on. What's going to happen to it when we have risk off?
Yeah, and that, that's a big divergence.
Yeah.
And so I think it's because of that divergence, you have to focus on the short side of the Aussie. You just have to. Right? And so, but I do, like I said, this right here, if you look at the Aussie, like longer term, let me just put on a monthly chart. That is a big false breakdown. That is a big V bottom. And I got to play into that. I think over the next year, if I had to just take a guess, I'd say over the next year, we're going to be trading up in the 80s, 90s, somewhere up in this neighborhood, right? And I don't, and if you guys are equity market bulls and you're thinking, oh my gosh, that's going to be, if the Aussie's going up there, that's going to be really good for stocks, and that means the S&P is going to 6,000. I don't necessarily buy that argument. I think if we're in a commodity super cycle and commodities start really squeezing and prices squeeze, it's more of an inflationary thing. I don't know if the stock market's going to take it so well. So what I mean is we could really see stocks go down and commodities go higher. You remember Dale, back when crude oil was at 100 and we were on our way to 150.
Yeah.
You remember when the stock market started to not like crude oil going above 100?
Yeah.
Like crude oil was hitting like 120 and the stock market started to go, oh, wait a second. That's not good. That's really going to start impacting consumer spending, right? I wouldn't be surprised if commodities rip higher and the stock market takes notice and actually goes the other direction. So anyway, it's just, some food for thought, just because, there's a point when you're looking at these commodities saying, okay, commodities going higher, signaling inflation, and inflation is signaling that we're moving in the right direction with the economy and their spending. And but at what point does demand falter because commodity prices become too high? And maybe that's a good debate for Steve and Stelios. Good morning, guys.
How does inflation mean that we're moving in the right direction? Sorry, I didn't catch that.
No, just people look at like some of these commodity prices and they're like, well, the Aussie's going higher because the copper demand is higher, and crude oil is moving higher because there's demand and there's more people driving now that we're coming out of lockdowns. But at what point does that diverge, where you see commodity prices get to a point where the consumer demand actually drops because whether it's lack of ability to afford certain commodities, or it just curbs demand because prices are rising? What happens then? And just needed to mention, stocks are breaking lower, by the way. Yeah, actually the Dow's near yesterday's lows, and
Canada's pushing through the wedge line here too.
Oh, what's that?
Canada is pushing up through the wedge line. Looks like it's trying to breaking
Yeah,
out.
like I said in the ForexAnalytix chat room, it's about ready to rip some heads off of shorts, I think, in the dollar Canadian. So you gotta watch this, especially if we start taking out the 126.50 level. But I do agree. I think it looks really, really good here. So I'm sorry, Steve Stelios, what do you guys think about that? Like, yeah, I know it's been, well, I mean, when did crude hit 100? I want to say it's like 2007.
But just before, it was when China was buying everything
2008.
and moved, right? So
Yeah, 2008. Yeah, if you guys don't remember this is, it started to rip higher, and then I guess it was right at the
peak oil was the kind of the narrative that was going around then.
Yeah. And stocks didn't like that. And then, obviously we got the housing crisis after that. But same kind of situation we're in today, actually, if you think about it. But anyway, go ahead, guys. We only have a couple minutes.
I was going to say that for us, I agree with you in terms of commodities going higher. And I think we are going to see inflation in that respect. For commodities to start squeezing really hard, there needs to be one of two things. Either there's a severe lack of supply for whatever reason, and we saw things during COVID. This can happen. Although with COVID we had a lack of demand as well, so it was kind of balanced. Or you get this massive growth phase where somebody like China in 2007 and before is just buying everything because they're building everything and they're expanding. So for commodities to really perform really well, I think you need to get one of those two scenarios. Obviously the second scenario is the preferable one.
How about one more, Stel, like a big bear market in the dollar would also create higher prices.
Yeah, dollar denominated assets are going to rise if the dollar rises, but drops, sorry.
Yeah,
that can be one reason as well,
Yeah, as everybody knows, I'm not a fan of the dollar, but having said that, I'm not a fan of any fiat currency, meaning that no matter what happens between the dollar and the rest of the fiat currencies, what remains
is Bitcoin.
A scientific mathematical fact is that all currencies are being debased over time. Now, the reason why I don't think, of course, Bitcoin is a solution to that is because it's a fiat cryptocurrency. I mean, in my opinion, there is absolutely zero difference on the fiat nature of Bitcoin, since it's backed by nothing, than the dollar. So if I had to choose between the two of them as what would be safer in case of turmoil, obviously the dollar would be, right? There is no question about it, because you still need dollars to make payments. You still, dollar is being used in global trade. You still need dollars to pay your taxes if you're an American, so on and so forth. So the problem with Bitcoin and the existing cryptocurrencies is that they are as fiat as the rest of the currencies we've been using. They have nothing backing them up, as simple as that. And it's a global race to the bottom, having to do with value of currencies, right? Because everybody's doing the same thing. Everybody is trying to debase their currencies against real assets to, in essence, make their unaffordable debt piles being more affordable by inflating away part of the debt over time.
Nice shot on the S&P, Blake.
Hey, thank you very much. I thank you very much. So, hey, I want to leave you with one other idea. Speaking of Bitcoin, Steve. So you said you're not a very big fan of Bitcoin, or not a big fan of any fiat currency, but you say that Bitcoin does act like a fiat currency in a sense.
It is a fiat cryptocurrency.
But if you've had your choice, you would choose, it wouldn't be Bitcoin. So how are you viewing Bitcoin as we're approaching this really key, I think really key channel support here? Matter of fact, let me redraw that. It got kind of screwed up overnight. You can see that Bitcoin has really been underperforming. We've had a lot of these altcoins like, Ethereum, rip to new highs, almost.
I think we're getting closer to a big corrective move lower in all of those. before we can actually move higher.
Why do you think that? I mean, look,
Because
I've
clearly,
sat here and I've sat here and watched Bitcoin go from 20,000 to 60,000 over the last few months. So what's to say it's going to stop, especially with all this institutional money behind it now?
first of all, I think the amount of institutional money behind it is exaggerated to begin with. Yes, there are some institutional money that have poured in. Second of all, I think it's overdone for the time being, and that's why we see major divergences on all time frames. So I do think that this is not the place somebody should be speculatively buying. I think this is the area that you should be looking for a larger correction if you want to buy that, fine. But I do think that we are much closer to a big corrective move lower than to another big bull run higher. I think we might get another big bull run higher, but I don't think it can come before we get some, some at least either prolonged consolidation or a sharp pullback, because usually these type of assets tend to produce very sharp moves.
All right, very good.
Hey guys.
Hey, you got your interview, right, Dale?
Yeah. Dave is in the house.
All right. Hey, thanks, Steve Stelios for chiming in. Dale, thanks for always being here. I just want to say, guys, if you haven't visited our webinar sponsor, remember Pepperstone Securities. If you open an account with Pepperstone using this little button right here through our website, you can actually qualify for up to 4 months of free premium ForexAnalytix. And then if you live outside of the US and Canada, or inside the US and Canada, make sure you visit Forest Park FX. They're our other webinar sponsor. So make sure you visit them. We appreciate they make sure that this can happen each and every day for free for you guys. So thanks, Dale. Thanks, gents.
Good hunting,
see you guys.
buddy.
Yeah, I'll see you guys in 45 minutes on the Morning Edge. See you in a bit.
Bye-bye, Blake.
Thanks, guys.
Okay, Dave, welcome back. Dave.
Hey, Dale,
Farber.
can you hear me?
Got you, Dave. How are you, buddy?
I'm great. How are you guys doing today?
Okay, so some interesting action since you and I and your last visit with us, Dave. If you want to share your screen, perhaps
Absolutely.
we could talk about what's on your radar here. Okay.
Great. Can you see that there?
Yeah, we have copper. So I mean, an amazing run from COVID.
Yeah.
Go ahead.
I was gonna say, Dale, first and foremost, thank you so much for bringing me back on. Really appreciate it. I enjoy the time we spent together. And yeah, it's been a very, very interesting couple of months over the last 3. I think the general theme I'm seeing in my analysis, in my macro analysis, is a general rebalancing going on underneath the surface in the equity markets. But in the end, everything looks bullish, and it looks to me similar to some of your other speakers moments ago. Obviously, different time frames, but it seems to me like commodities are the theme for the next many years.
Okay, so you're a believer in a commodities super cycle.
Yeah, I guess it's not so much a belief, but more so what the charts are suggesting.
Okay.
And if so long as the charts continue to suggest that, then that's definitely the way we'll be positioning our portfolios.
Okay, so even in bull markets, sharp corrections can occur. When you look at this, looks like you have a little pennant or triangle.
Yep.
That we're in right now in copper. I guess you would anticipate that it would break out in the direction of the trend, which would be to the upside. Let me ask you this: does any of the divergences that I see you have RSI up there bothering you at all, that we're well under, even though this is, what is it, a monthly chart or a weekly chart?
Yeah, so what I'm going to do here is I was looking through a number of monthly charts over the weekend, and okay. I thought it would be a complete quote unquote divergence from some of the short-term perspectives that you guys offer here. So so when I do, for full transparency, when I do look at the daily and hourly charts on copper, there are some negative divergences, and I would not be surprised to see copper as perhaps the weakest commodity over the next couple of weeks if the equity markets consolidate or pull back. But with that said, on a longer term scale, copper looks absolutely bullish, and that's what we're looking at here. And I've got about 8 charts that, time permitting, we'll go through.
So that buy breaks in copper. I like the grains. I'm wondering if you include anything like soybeans. Had a very dramatic run. Let's see what your candidates are in commodities that you like. Go ahead, Dave.
Yeah, and I have seen some of these agricultural commodities. They do look good. The reality is my charting software just doesn't cover a lot of them, and frankly, I just don't focus on them. But as much as I do these, so let's just briefly take a look at. Copper.
They do have ETFs in the grains now.
That's true. That's true, and those I do follow. I just, for whatever reason, haven't been as attracted to the agricultural commodities as I should be, and so
well, you can't eat copper, Dave.
That's a good point, but hamburger's delicious.
All right, so right. Copper. I concur with you. Boy, it'd be nice to buy a pullback to the breakout, wouldn't it? Around. Yeah.
If you look at the daily chart, I think any pullback will be closer to around 4. I don't think you're going to see it move all the way back to 340, but we have to remain open to such a possibility if general equity markets do sell off for whatever reason. But the general theme that I'm seeing here and many other places is we've had years, and so this chart goes back all the way to 1989, just for perspective, but since 2006 all the way to where we are today, we've been frankly range bound between 2 and 460 here, and I think we're very close to an upside breakout of this pennant. When you look at RSI, one might look at it as a trader as overbought, but when I look at it in my analysis, RSI being over the 70 area, 69.1 Fibonacci level is where some of the most bullish moves in copper occur. Look back to 2005 when we broke above this area here. We went from 2 all the way to 426 before we ultimately gave up that move. So I think we're just getting started in copper, and so I would be a really aggressive buyer if we got such a pullback. A lot of great opportunities.
Like it.
And then moving on to gold. So gold, and we've been covering this in our videos on our daily charts and weekly charts. So obviously this is longer term perspective. Gold's been on a pullback since frankly July, and it's presented a lot of opportunities to take profit or short. But I believe right now that we're very, very close. If we haven't already bottomed, we're very, very close to a bottom in gold. And what you see here is
cup and handle.
Exactly right. Very bullish, rounded bottom. All dating back all the way to 2009, broke out of the neckline here around 1650. There was another neckline here, 1350, and now we corrected, and we're back finding support here at that 18-month moving average and bouncing right now. And so whether you're looking at the daily or the weekly, now gold is starting to look constructive. We're bouncing here at that 50 RSI level, and so I'm a buyer right now. I think gold and silver look very, very attractive at these prices.
Okay.
When you look at platinum, go ahead, Dave.
Okay. No, I'm just saying that the one thing that could upset, that also could be a trigger for corrections, or even like you said, gold may have bottomed, or there could be one more challenge and go to 1600. And I think it may do that because I don't think dollar strength has completed. We're pulling back, but if we get another run in the dollar, it's going to be interesting to see if, and there are times when you have a strong dollar and strong gold. Right. So it's going to be interesting to see how the PMs react if we say take the Dixie back to 96 from where we are now. Okay.
Yeah. And I can see the dollar getting back there, and that's definitely on my radar. But as I look at platinum here, platinum's probably my favorite precious metal right now, given its relative value to gold and silver. I mean, look there, it's trading in terms of momentum at its highest level. That makes
us too.
Yeah, you guys are on the same page?
Yeah. I've been saying it for a long time. I think platinum is an amazing long-term opportunity.
And Dave, most of my career, platinum always traded at a premium to gold.
Yeah, 1.5 premium typically.
Yeah, I mean, for I'd say 20 years of my career, I mean, I think it's been the last few years since that changed, probably since 2011, the gold peak up there. But yeah, I mean, if we just revert back to what was normal, we should see 2000 or better, right?
Yeah, and I love to look for long-term divergences in the macro in the macro charting, and platinum has one of the best I've seen right now in the market. Look, RSI right now at 69 is the highest level it's been in since the breakdown in 2008, right? So it might take months, years to play out to get back to 2300. I can't predict the future, but it's going there, and it's probably going much higher than that. So when I see such a breakout here, that gets me extremely bullish. Palladium, not shown here, but Palladium obviously ran from, I think it was around 800 to about 2,700 here. And so platinum and palladium, they're kind of part of the same family. When palladium becomes too expensive, companies, especially for these electric vehicles, move over to platinum. So it's kind of one of those relative demand things. So I think platinum looks fantastic. Looking very quickly at the gold miners, and this is what gets me bullish on gold, on the gold thesis.
They're holding up better, right, Dave?
Say again?
They're holding up better. When gold had tested its previous low and had a double bottom, the gold shares put in a higher low.
Yeah, you're absolutely right. And this here is a monthly chart, but when you look at the weekly chart and the daily, the gold bugs index and other ETFs relative to gold are actually breaking out already. So they've already broken out of some of their momentum bullish flags. So when I look at bullish flags, I do price and I do momentum, and the momentum gauge is leading price on the relative ratio, which is what you want to see in a breakout. So it might take some time. Obviously, we're pulling back today. Consolidations are healthy, but I think we're setting up for a very, very nice run to that 650 level over the next 12 months or so.
Nice look.
Yeah. Move this here real quick. All right. Now, when I look at silver, I think has some of the best volatility in terms of the upside, but it's very much range bound right now between about 22 to the downside and 30 to the upside. Once 30 is breached, I think we're going to make a pretty clear shot towards 50. The most important part that I see in silver here is that we're getting higher highs and higher and higher lows. And so it's a question of when, not if, silver really breaks to the upside here.
Okay. Does it bother you at all that gold has made new highs, taken out 2011 highs, and silver, if you covered up the title and you remained unbiased about precious metals, couldn't you say that this is just a correction in silver back up to, this $30 level from the highs that we had in 2011 and the lows we had? You know what I'm saying?
Yeah, you could absolutely make that case. And obviously, at that point, you have to talk about supply and demand and so on, the industrial nature of silver versus gold and so on. But when I look at silver, it's broken out of many long-term relative ratio charts against gold. And so I think we're just in a relative pullback right now. Okay. But yes, that's definitely one of the ways one can look at it.
Well, that's one of the bearish arguments for gold, is that silver did not confirm the gold move.
Yeah.
Whether it's valid or not, that's what they're hanging their hat on. Go ahead.
You got that.
All right.
Yeah, absolutely right. And
uranium. Yeah.
Uranium. This continues to be the most asymmetric risk reward of my trading lifetime.
Yeah.
I think uranium is, we're still in the second inning of what can be a major move. And what I'm showing here is the price of uranium participation corp. That's one of the proxies for the price of uranium. And despite the pretty major move that we've seen since the March lows, uranium participation corp hasn't really moved out of its range yet. It hasn't even broken out, between 350 and here on $6 to the upside. We're just now hinting at a possible breakout here. And above that, frankly, there's blue sky all the way to 950 on this particular indicator. I'm not going to go into the supply and demand reasons why I'm so bullish.
And this is traded in Toronto. Any reason why you chose this ETF?
Yeah,
Well, it's an ETF or a stock, a company?
It's a company that is basically a holding company for uranium, physical uranium,
like royalty type company, right?
Correct. And in my opinion, it's on the North American exchanges. It's one of the best just barometers for the price of uranium. Some reason stock charts just simply doesn't have uranium futures right now, and I don't like that.
Do you think any of these would suffer, say, if we had a 20% pullback in stock in equities and we had some risk off?
Yes, I think so. I mean, ultimately, every correction is different because if a correction is led by, as one of your previous guests said, a commodity squeeze to the upside, then perhaps not as much. But any deflationary style correction will cause uranium to pull back.
Okay.
And not necessarily the price of uranium, but certainly the equities. They're a lot more correlated. So speaking of equities, I do want to just touch on the Ura Global Uranium Etf, right? That's readily accessible on the U.S. exchange. So first and foremost, look at the volume here over the last 5 months. Massive move to the upside. We are about to break out of a 5-year range here around 21, and from here, I mean, I think this can double or triple. So the larger names can still go 2-3x from here. Cameco it comes to mind, Kazatomprom, but the smaller names can go 5-10x. Easy, and then one or two names can go 50 to 100x if we look back at the old cycle from 2004 to 2007. So supply and demand is fantastic. The chart is a screaming buy right now, and so I'm very, very bullish on uranium, and I have been for better part of 18 months, and I continue to be so right now.
Okay.
And Dale, how much time do we have? Just
10 minutes.
Okay. So we've got a little bit more time. Going through the overall theme of commodities and kind of a lower dollar and a bullish equity environment. Here's an index for the emerging markets. You see here, we have on smaller time frames broken out already, but I don't think we've actually broken out of the price range that we've been in since 2005. Between roughly, let's say, 750 here on the downside and 1340 on the upside. Teased it here, but we were basically rejected at that 69.1 Fibonacci level, consolidated, and I think we're starting that upward move after the back test. So I think that emerging markets, if you're gonna, I don't really trade the regular equity markets. I just don't like the risk reward there. But if you're gonna do it, emerging markets are the way to go, in my opinion, right now. Because there's just much more upside here. And it's related to commodities because they're so heavily weighted in that sector.
Okay.
When you look at China, this is one of the most interesting charts for me because there's obviously a lot of geopolitical discussion about China and the U.S. and so on. When you look at the price of China, of the Shanghai index, we've been consolidating since 2008 here between 60 and 64 on the downside. And although we did have that attempt at breakout in 2015, roughly 3,600 here. But when you look at this consolidation, basically higher highs, higher lows, and now we're back testing successfully the 61.8 Fibonacci level. Once that breaks to the upside, if it breaks around 3,600, I think that you're going to see a major move in the Shanghai index, one that could potentially be a 2x move in one of the major indices in the world. And obviously that's going to impact commodities and the emerging markets, but it's just a general sentiment indicator, in my opinion, of the global reflation trade.
Okay. China way underperforming everything.
Recently.
Everything.
And this is why, I don't necessarily trade these markets, but I look to them for perspective. I think it's so important to see what's happening underneath the surface.
Okay. I actually think that China might be the reason for a pullback in domestic equities, but the markets can't have it both ways, Dave. I mean, back in 2008-9, when we were in the soup, China wasn't okay, and they were the growth engine for the globe. And analysts were saying that they would help pull us out of that recession. Of course, we know who pulled us out of it.
Right.
But if that's the case, that if China, which is starting to pull back on QE liquidity, has some problems, I think that could also filter into global markets as well. So important that it breaks out to keep this global recovery going, don't you think?
Oh, without a doubt. I think the world can't continue going higher if the Chinese market doesn't.
Okay.
Yeah. So one of my favorite ways to play the commodity cycle that we're all seeing here is dry shipping. We've been on this trade for a while, but I think we're relatively early. We just now got a bullish crossover here in the moving averages. RSI is at its highest level since this ETF was in existence. Now, this ETF is relatively young, but I think when this breaks this 22 level, I think we're going to see a major move in the shipping stocks, many of whom have been absolutely killed over the last decade. So they're trading on pennies at the dollar. Some are better than others, but I think this is a great way to play the commodity boom.
Okay, a nice looking chart. Okay.
Yeah, and we can certainly pull back, but
what's the difference between this and the Baltic? Was what people used to really pay attention to. Was it called the Dry Baltic Index or something like that? Do you know what I'm talking about?
So the Dry Baltic Index, as I understand it, and pardon my ignorance if I'm wrong here, but I think that tracks the actual price of the commodity that the shipping companies actually make when they store, whereas this is the actual companies and their underlying equities.
Okay. Thanks for the clarification.
You got it. So very, very much related to shipping is crude oil. And we've been kind of pointing out kind of the bullish nature of this breakout here. And while a pullback like we've had over the last couple of weeks didn't surprise us at all, it was very healthy. I think this, in the grand scheme of things, is just getting started. We've back tested this trend line breakout here. Potentially we can pull back to the 50 level to back test these moving averages, but we've got the bullish crossover, and I think we're going to set up for a move not only to 75 area, but ultimately move into the triple digits over the next 12 months. And that would be extremely bullish, at least in the short term, for obviously commodities and bulk shipping and so on. But down the road, as your guest said, potentially that might create a situation where it's going to cause for equity volatility.
Okay. What if we go to 35 first? Would that upset your uptrend? Because I don't think it would.
Well, I mean, I think so. I think so. If we went to 35 here, I think we'd have to reassess and see how. And my whole style of trading is frankly very simple. I just like comparing RSI momentum relative to price over different at different price points. And so long as RSI is showing relative positive divergence, then for me that's a good sign. If the opposite is true, then it's a bad sign. So unlike most people who focus on price, my primary gauge is momentum. And I know price creates momentum, but that's just kind of how I approach analyzing stocks on various time frames.
Okay, so Dave, let's assume that you're right about a commodity super cycle and higher prices across the board and everything you've shown. What would be the worst performing asset class in that environment?
Well, I think the US dollar, if you consider that an asset class, that's obviously a currency, that probably goes down into the 70s. If this view were to occur, and ultimately, I think interest rates are going to be moving higher, so bonds are going to get hit.
Okay.
But at the same time, I can also see growth equities continue to get hurt, even though right now they're kind of breaking out of the short-term consolidation. But in the long run, they're just going to get repriced, and their relative valuation to value won't be as high as it was over the last decade.
Okay, so FANG is going to be an underperformer for quite some time compared to value and cyclicals. right?
Generally speaking, yes. That's that's what it looks like.
Okay.
And then finally, just want to touch on the chart of Ripple here. I know we touched on Bitcoin here earlier. Yesterday, I was talking to a Bitcoin manager in Singapore, and she was talking about kind of the overall market, which is a fascinating discussion for another time. But when I follow Bitcoin, Litecoin, Ethereum, and Ripple, really it's the four names that I'm following. I'm seeing mixed signs. On the one hand, I was looking for a potentially a deeper pullback, and every time I see that, it seems to rally once again and break out to new highs. So in the context of crypto, Ripple is really my favorite chart, followed by Litecoin. I think that right now, if we can sustain this 88 level on a weekly and monthly closing basis, I think we're headed to $3. So the risk reward for me on Ripple is the best. I'm not going to speak to kind of whether these currencies are fiat or not. It's above my pay grade, frankly. But yeah, Ripple looks to me that like it has the most asymmetric upside. I like Ethereum as well and Litecoin. If we're going to be bullish on this theme, those are the three coins that I would be investing and trading in.
Okay, well, Dave, I really appreciate you coming here, and I could tell you're a uranium trader because your analysis was glowing today.
Yeah, well,
well, you know what happens when you get irradiated, you glow. So anyway, very nice analysis on some great telescopic views. I love looking at some longer term stuff, a guy who looks at 4-hour charts and 15 to dial in an entry. It's refreshing to see the forest from the trees. You do a great job of that, Dave. And I want to thank you, my trading warrior brother, for coming back and updating us on uranium and giving us great looks on commodities. And look forward to talking to you down the road in the rotation. And hope that all your forecasts and positions continue to benefit you and all the people that follow you and listen to you, Dave.
Yeah, Dale, thank you so much for the opportunity. Before I sign off, I'm just looking at the chat here. Polkadot, Brock mentioned Polkadot. In yesterday's conversation, she was most bullish on this Polkadot. I've never heard of it prior to yesterday's call, but it's certainly something I'm going to do some due diligence on. Have a great rest of the day.
And Dave, we got a minute. What's the best way for people to get a hold of you? On Twitter at Moneyology, or your website, or what?
Yeah, I'm most active on Twitter at Moneyology. You can find me at dave@moneyology.com as well. My website, moneyology.com, is live and active. It's not as I'm just too busy. I'm not updating every slide. That it kind of frustrates me, but I do. For the premium subscribers, I make videos, about 3 to 4 videos a week. I'm about to post a uranium review. I also have a la carte videos on Patreon for those who just want to have access to one asset class, such as uranium, or one sector rather, such as uranium or precious metals. Patreon allows you to do that. So that's Patreon at Moneyology.
Any, before I let you go, any view on kryptonite?
You always ask me that, Dale, but it's way too early for me.
I have a view for kryptonite.
Well, okay. Well, you're like Superman at ForexAnalytix. So
that's what I wanted to say. Heads if you're Superman.
All right. Well, thank you so much again, Dave, and I'll be in touch with you. Maybe we could get back together, say July-ish. Something
Sounds
like
great.
that. See how things are
unfolding.
And so remember, everyone, don't just count your uranium, your uranium and copper and commodities and things that when they fall that hurt when they hit you on the foot. You got to count your blessings. There's always something to be grateful for. I'm grateful for the team that I work with and Steve's kitty cat.
Indeed.
And encourage everyone to become part of our community. So that's it. There's Dave's Twitter handle. Thank you again, Dave and Steve, and we'll see everyone tomorrow. Remember, the morning edge begins in 15 minutes.
Yes.
All right, everyone. Adios.
Ciao.